Passwords need to fall back to earth. An early FanDuel investor explained why even the huge Paul Martino, general partner and co-founder of Bullpen Capital, made a name for himself in the business of sports after backing sports betting company FanDuel in its infancy. He invested in FanDuel when the company had only 7 employees and was generating only $1 million in revenue. Today, FanDuel is now owned by Flutter Entertainment, which is valued at $29 billion. FanDuel fitted Martino as off by one investing strategy that seeks out interesting companies that are off by one factor, which could mean the company is based in a geography no one is paying attention to, or is in a category that everyone else in the industry dislikes. Martino's experience in investing in sports and gaming means he gains exposure to some of the leading early startups that are looking to raise funding at the post-seed stage. But even for Martino, investing in this space in recent years has been challenging, even after the legalization of sports betting across the US. We did almost no sports betting, gaming, gambling investments in 2018, 2019 to 0, Martino said. And guess what, in 2021? We did 6 of them. Finally the cool stuff showed up, said Martino with relief. Some might assume the cool stuff means crypto. After all, it's the dominant theme that captured the investment community's attention last year. Venture capitalists threw over $23 billion into the market last year, more than in the 4 prior years combined, according to CoinDesk Research's 2021 annual report. It's also made waves within the sports community. Crypto exchange FTX has secured major partnerships with sports superstars, such as the NBA's Steph Curry and the NFL's Tom Brady, while Crypto.com secured the naming rights for the Staples Arena. Several crypto companies are also running ads at this year's Super Bowl. According to the Wall Street Journal, NBCUNIVERSAL, which is airing the NFL's championship game on February 13th, is seeking about $6.5 million for a 30-second ad. Despite the synergies between the 3 worlds, Martino remains wary. At a time when most VCs are jumping headfirst into Web 3.0, we are very cautious about crypto, not because we don't think it's not the next big thing, Martino said. We actually do, but we're in the hype phase of it. It's got to come crashing back to earth before the real growth happens. In Martino's eyes, the synergies between crypto companies and sports at the moment comes down to the companies needing to attract the attention of a mass audience. You can't advertise on Netflix, Martino said. Nobody hardly goes to see movies. Right. So, what are you going to do? You have more money than you know what to do with. You're going to buy live sports. Crypto.com's advertisement with Matt Damon and the firm's marketing blitz is demonstrative of the hype in the crypto industry, Martino said. A correction is inevitable, he said. We'd rather stay out of the hype phase of it, said Martino during the January 19th interview. There's no doubt watching Matt Damon all weekend on the wildcard games. I think that ad will go down in history. Since the start of the year, crypto bellwether Bitcoin has fallen more than 7% while Ether has declined by more than 19%. More speculative altcoins were hit even harder, such as Solana falling 43%. In recent weeks, many investors have moved away from the pricey growth stocks and risk assets as the Federal Reserve raises interest rates and tightens monetary policy. If too many people are talking about Web 3.0, that actually makes us nervous. We would rather invest once it starts coming back down to earth, Martino said. What we continue to do a lot of is look for overlooked companies, overlooked categories, and overlooked founders. Martino is taking a similar approach when looking at the broader sports betting industry in the US, which is becoming increasingly competitive. Sports betting is a low-margin business, Martino said. He believes those companies that combine sports betting with online casinos and iGaming will see the most success. This transfer of people, sports bettors, DFS people now becoming casino players, Martino said. That's where I think a lot of the action is going to be in 2022. Investors need to pay close attention to the CAC to LTV ratio, which measures the cost to acquire a customer relative to its lifetime value. I don't think we're anywhere near the end of the growth of these categories, Martino said. But I think that some of the completely irrational initial overvaluation was getting corrected. Because of this challenging market, Martino looked outside of this for his last 3 gaming deals. It's not that we're going to go exclusively international, But those opportunities were way more interesting to us given this marketplace. Martino said. He highlights two under-the-radar sports-focused companies has betting on. 1. Rei do Pitaco is a Brazilian daily fantasy sports mobile app. Open Capital participated in the seed round as well as the recent Series A round, where the firm raised $32 million. Nigel Eccles became the chairman, and we're going to go run the FanDuel playbook again, Martino said. To Draftia is also a daily fantasy sports app operating in Mexico. Open Capital participated in the seed round alongside firms like Sequoia. Mexico has the coolest sports calendar of anybody, Martino said. They not only have everything in Mexico, they have everything in South America, and they have NBA and NFL. You've literally got an absolutely awesome year-long calendar for reactivation across all the sports and geographies.